This episode is brought to you by FreeFlow.ai, because if your best workflow lives inside Karen's head and Karen's on PTO, you've got a problem. FreeFlow.ai brings clarity to agency operations without replacing your people, just replacing the mess. All right, ladies and gentlemen, we are back. This is Risk Seller. My name is Brandon Schuh.
And I'm Nick Hartmann. Hey, did you get a new mic?
No. Same mic.
I don't know. Looks new and different.
This one, well, I've had this one for a little bit now. It's just,
why didn't you tell me? And by the way, why didn't Risk Seller buy me a new mic? What's up with this?
It's either like broke.
It's a redistribution of our profits here without me involved.
Yeah, we're embezzlement.
Hey, quit misdirecting our funds.
New $35 mic.
Is that what it is? $35?
I don't know, something like that. It was not expensive.
We're back. What are you drinking tonight, by the way?
Ooh, my favorite. Drinking a Bordeaux.
Ooh,
this Bordeaux. I ordered this off my, my wine text like 3 months ago, and I finally just got it. It's a Chateau Tour Rouchen 2022 Lussac Saint Emilion. That's all I got. It's 94 points on the James Suckling scale, though.
What do you taste like? Hints of what? Notes of what?
Well, this is trying to remember what side of France this is from, or what region this is.
Sounds like the south of France. It just sounds nicer when you say that. South of France.
Unfortunately, I took 5 semesters of French and I still can't speak the language. So, but yeah, Bordeaux. It's very, very rich, very earthy. Which most Bordeaux are pretty earthy. Pretty dark fruit, earth tones, tannins, a lot of tannins, a lot of texture to the wine. But it's really good.
Nice.
My general approach for the Bordeaux is the older, the better.
Like, it's kind of like you.
Go ahead.
It's kind of how you feel about, your women. You like older women.
That's about as far from the truth as you could possibly get. But I like where. Well, no, let's not go crazy. That's not what I'm saying at all.
I'm kidding. My God.
Jeez. Don't
middle age?
Don't put me in that camp. No, I'm just saying, never mind. We're gonna leave it. We're gonna leave that right there. We're gonna leave that right there.
Genius.
What are you drinking?
Drinking a tequila. It's a tequila type of night. I knew you were gonna be crabby. You sounded a little sad and crabby earlier. So I was, you know what? I'm drinking tequila tonight. I'm gonna get fiery. We got to cheer Brandon tonight.
No, I'm excited. I'm in a good mood. I'm going to Austria on Monday.
Oh my gosh.
I'm going to go see some of my London friends in Austria.
What are you going to do for fun?
Ski, baby.
Oh my gosh. You better come back with have you been working on your balance and lay? I mean,
yeah, I'm swimming, almost a mile every night now.
Where?
Williston Community Center. Williston. Look,
shout out.
The facilities aren't much, but the pool is nice. It's about $800 a year for my whole family, so that's a pretty good deal. That's 2 months at Lifetime.
I'm drinking the same tequila, this Humano. This is good stuff. Really good. You only need 1 glass, maybe 2. A lot of people think I drink 2. Sometimes I drink 3.
Disappeared.
Oh yeah, nice. There's a shot. So with that new Risk Seller background you have, the digital one, it kind of makes you wash out on the sides.
I'm like the news guy that wears green. If I was wearing white, I would just blend right in.
Kind of like our background at work pictures.
Exactly.
Yeah. Shout out Jane.
Jane, miss her. Haven't seen Jan in a while.
I know. She's being a mama.
What have you been up to this week?
I've been all over the place.
Dealing with some claims. You got
All
claims
over
going
South
on.
Texas. A few claims, a few positives, a few negatives. What does Zach say? Zach Freeman, another shout out from our boy. You have 3 or 4 bad things that happen in a month, 3 or 4 good things, and everything else is just kind of like, whatever. Know what I mean?
What was the golfer that said you only need one good shot to make a par?
BJ Singh?
No.
Tiger Woods? John Daly?
It was one of the like Bobby Jones era. Who was like Bobby Jones?
Jack Nicklaus?
No. Bobby Jones, not who was Bobby Jones' like adversary.
Bobby Jones and
It was Walter Hagen. Walter Hagen.
Yeah, Walter Hagen. Those cheap shorts that Walter Hagen decided his family legacy decided to make is Walter Hagen golf shorts. They're not good. In my opinion. It's my opinion. Allegedly. My opinion.
Disclaim. Allegedly.
Are we recording this? Are we going to be on YouTube?
Oh, yeah.
Again?
Yep. This is.
Well, I hope they like.
We didn't. I'm not gonna lie to you. And you know what? Our short video. So Mike made a short for us, and that got quite a bit of hits. In terms of, it was just the quick overview with our guest last week, Cliff Cupchin. That got it's up to 2,000 views or something. But our full episode, we don't have that many subscribers yet. So if you're listening to this, go subscribe. We don't expect anybody to come on the podcast to look at our ugly mugs, but hey, I got this new background for you, so you don't have to look at my office mess that I have behind me. So I did that for you, the fans.
I feel like it wasn't a mess before. Are you in the office or are you at home?
I'm at home. What do you think?
I don't know. You work. This guy works all hours of the night. He's the hardest worker I know.
Say that again for the clients.
It's more.
Hardest worker.
It's more for the team.
No.
Team. What are we talking about tonight?
We're talking. We got some good. Got some stuff.
Privacy stuff.
Some big. This is right up your alley.
Digital privacy guy to be.
You love privacy. We got starting out here. We got about as big of a defendant, or I'm sorry, defendant as you could get here. We have a Google
trial.
Not you, but Google. They were the defendant of a lawsuit. They just agreed to pay $135 million.
That's nothing for them.
Settlement. It was all around user privacy. So Google just agreed to pay $135 million to settle claims that Android devices transfer user data without proper consent.
It's like you get Android people didn't know that they did that. Come on, it's an Android.
Exactly. But now, $135 million is not existential for Google. Obviously,
it's a drop in the bucket. That's a deductible, Brandon.
This isn't about the balance sheet pain necessarily. It's more about the precedent, I guess. But because once again, we're seeing the pattern, data is collected faster than governance evolves, and consent becomes this legal afterthought. But for insurers, this matters.
Absolutely.
Right. First, privacy risk is no longer, I guess, theoretical. Right.
And by the way, what's the settlement? Everyone make about $10 in this big settlement?
Yeah, that's the problem with these. It's just like nobody. The only people that make money are the attorneys, but it's definitely establishing precedent. Regulators are not asking if data misuse occurred; they're litigating how much it's worth, which is kind of that same damages style case that we were talking about, and we'll talk about with Howden here momentarily. But same deal, right? It obviously occurred. How much is it worth? Well, I guess it's worth $135 million here, but is this going to become a, ongoing scenario?
Not if they released our information, our risk seller information. I mean, they'd have to bump that up. Are you kidding me?
My God, can you imagine?
It'd be huge.
Second, every company selling data-driven underwriting is implicitly promising accuracy, fairness, and restraint. Google's settlement reminds us that the scale and sophistication do not immunize you from misuse or from the class action. So, lastly, this is a quiet backdrop, to everything else we're going to talk about today. But if your business model relies on data to justify pricing, trust is probably not optional. It's an asset, right?
I don't like people taking my assets. What was that GM privacy? What was that GM settlement too?
I don't remember the number.
Was it significant?
Yeah. And yet, cyber policies are still dirt cheap.
Why? I don't understand.
I don't know. Probably because they don't have any coverage.
They don't really cover anything. FTC finalizes order settling allegations that GM and OnStar collected and sold geolocation without consumers' informed consent. Of course, January 14th.
Of course.
What was this? I didn't consent to that. Who reads these consents? They have a voice coming over and be like, hey, by the way, here's all the bad stuff that can happen if you're.
You see what that did for the pharmaceutical space? Nothing. And if you take this pill and the side effects are death, it's not our fault. It's
a penalty.
Our fault.
Already accumulated with $500 million in costs related to investigation and litigation. Yeah.
Do you how often are you if a screen comes up like that where somebody says, "Are you okay with this?" Are you clicking past the language or are you
terms of use?
Language? Yeah.
Come on, what am I going to read that? Who's got time?
So your bark is louder than your bite, really. You're a privacy advocate, but
I'm going to run it through ChatGPT.
Not if you have to read the
shove
terms.
it in there and be like, hey, what's my risk here? They'll say it's all kinds of risk. And then if they're wrong, I'm going to sue them.
ChatGPT will say, no risk at all. Don't worry about it.
Enjoy.
I have a new somebody that a client referred me to. They're starting an AI education company. So this woman who's running this nonprofit is a literal rocket scientist.
And she's super easy to talk to.
She's actually super avuncular.
Should we have her on the?
We should have her on the pod for sure. Actually, that would actually be. She'd probably really appreciate that.
Why wouldn't you be able to have a rocket scientist on? That'd be awesome. Hey, rocket scientist said this.
Absolutely. But she's traveling around the world, educating kids in their local schools or wherever about AI and about its capabilities, but also about its its dangers and about real practical uses, bad uses, all that stuff. So super interesting.
Is she credentialed as it relates to AI?
I mean, obviously she's an rocket scientist, she's an engineer. So I
know, but what if they say this rocket scientist, folks, a rocket scientist failed to warn. She only told us about some of them, but she didn't say anything about this. Is she like an expert?
I think she's an expert. She's been doing it for it sounds like she's been doing it for a long time. Companies have been funding her to do this. And now now she's finally formalizing it into this nonprofit venture.
If it was in a box and we were climbing on it, they'd have a failure to warn claim. If something happens worse than what you know what I mean with AI. How do we know? Does anyone know?
We don't know. Nobody knows.
Nobody knows.
Nobody knows.
Hey, what will AI do? What would they? Nobody knows. Some people are guessing, but nobody knows.
That's pretty much the reality.
It's kind of like politics. What is going on? Nobody knows.
No, we know. We know what's going on.
No, we don't know.
We know. We know that it's
popular. Violence seemed to be pretty popular for some reason.
We know that they're trying to break the system, it feels like.
Well, I think that's the maybe that's the plan with some of these. Maybe
I think Stephen Miller. Well, Donald Trump is, in his demented state at, post 5 o'clock. I think Stephen Miller takes over and, he's very break the system because I don't know, that guy like abandoned one of his best friends because he had Mexican heritage. That guy is.
I think it seems to. I think to nuts. Me, it seems they're just all politicians are flaming violence. Don't you think? That's what it feels like to me. Let's get violent, everybody.
I think the whole thing.
Hey, remember, you got to have peace.
Have peace.
Peace, like back in the 70s, they always did this peace. Let's all have peace. Come on, people now.
Come together.
Smile on your brother. Everybody get together. Try to love
one another
right now. There you go, Brandon. See, does that make you feel better?
Beautiful. It's beautiful. It's just beautiful. Nobody's a better singer than me, okay? Everybody said I'm great.
Cade down here does a good one. He does a really good Trump, like probably better than Cade. Cade Johnson, shout out.
Get out of here.
It's unbelievable.
It's unbelievable.
No,
there's no way.
I can't do it. I really can't. I was going to try to do a JD Vance. I can't do that either.
Well, JD Vance has no remarkableness to him at all. It's hard
to. I mean, have you seen the baby Vance? The baby?
Yeah.
Yeah. I thought that was a real guy for a while. I mean, I don't. Doesn't it look like possible these days?
No.
Like that could be what? Come on.
JD, what somebody called him. Oh, I was listening to Anthony Scaramucci the other day. He was talking about Howard Lutnick, and he calls him Nutlick. Howard Nutlick. So good. All right, what else we got going on?
I think we're talking about Howden. Hey, who's you skiing with?
Only person you would know would. Oh no, I get the hiccups.
No, when he gets the hiccups, they don't stop. Everybody.
It's gonna make great YouTube. It's gonna make for great YouTube. But give me a second.
We're not cutting anything out. I'll tell you that. I'm gonna keep bringing it up so we'd have to thread the whole thing. In about 5 minutes, I'll be like, "Hey, do you still have the hiccups? Because you had them for a while."
Okay, I think I'm good. Convex, underwriter from Convex. I don't think you might know. You might have met him before. We won't talk about the rest of the people that are going. Anyways.
What?
Veering into Howden. So it's reported, we talked about this raid the other week, Brown and Brown, and there's been a few, right? We've got now the Alliant raid, the Marsh raid with Robert Parrish, the Aon raid, but the Brown and Brown raid was the biggest. All of them have gotten their temporary restraining orders. We talked about that. So they moved the business over the weekend, and that was the point of moving it quickly because they knew that the restraining order was going to come. So the reported revenue from that raid tied to the BOR letters that they got were $23 million.
So it's always underreported, isn't it?
Right. Probably underreported.
Unless you're like the New York Times or CBS or something, then it overreports and underreports certain.
Oh, here we go.
Anyway, that's still significant. I mean, that's so
23 million. Revenue? So if you took $23 million book
how many
value, 700 so far. If you took 700 or you took 23 million in book value in our current valuation system, that would be worth about $100 million in market cap, right? In actual valuation. Now, so that is going to be the key threshold number. Like, where is either a settlement or the court going to come in and value that $23 million?
You think they're going to run it into the court? This will be a settlement all day, every day, all day, every day.
Honestly,
all day, every day.
I don't know. Brown and Brown, I read my Powell Brown they released their earnings the other day, and Powell Brown was talking about this whole process. And I mean, they, as we know, they're a very litigious organization. It's how they protect.
You know better than anybody.
Yeah, it's how they protect themselves, right? Actually, interestingly, their chief legal counsel just died this week. So hopefully it wasn't a little stressful over there, but I don't know what happened. But
are you kidding me?
Yeah, he died.
That's horrible.
Yeah, their in-house chief counsel.
Did you know him?
No, I didn't. Yeah. So what's going to happen with this $23 million is the question. So Parrish.
Hopefully they have to owe him $100 billion.
Well, I honestly hope that it's a lot more.
200 million.
Because
all right, 3.
Because they need to set. I mean, this will come down to precedent now, right? On our whole repricing of the system conversation from the last couple of weeks. I hope they're super punitive, and draw a line in the sand here so this doesn't keep happening. Otherwise, they're just going to keep doing it, right?
That's correct.
If they get a $50 million settlement or a $50 million verdict, they're just going to keep doing this over and over again until the system corrects.
Were they like undercover? Let's do this. I'll talk to this person. You talk to this person. I'll meet this person over here, and we'll talk over here, and this and this and that. Just covert. I want to know the whole story.
It had to be.
This
super
could be a
covert.
movie.
So I've actually heard I've heard quite a bit of rumors around what has gone down here. I'm going to be careful here because I don't want any libel or slander coming out of this, but I'm not going to name
allegedly. And your
allegedly this happened. I've got a couple sources that have mentioned this now. So there was a retired former Hayes lieutenant, retired, that if you look at all the offices that they lifted from the Hayes contingent, Kansas City, Denver, Milwaukee, Boston, they were all super closely tied to this one person that retired. So the thought is right now that this retired person might have been obviously along with Jim Hayes and the whole crew, might have been kind of the quarterback of this whole lift out strategy. Now, none of that matters because they did it, right? They did it. They got caught. It's like, it's gonna be what it is now. None of that even matters. But that's the thought process in terms of how this deal was architectured. Because how challenging would it be to keep this thing quiet? It would be crazy.
Well, they didn't.
But they pretty much did. I mean, until they moved $23 million, right?
Well, did you think when were the complaint that had some of the communication, the text messages and things like that? When was that sent?
That was the weekend before, or Friday or Thursday or Friday before the raid.
They had it long before that, yeah? To put it in the complaint?
No, that would have been after.
Oh, they had it after.
Yeah. Otherwise, it would have stopped. Otherwise, it would have done an emergency hearing.
How'd they get the text messages?
Well, somebody squealed, but after the fact.
Wow.
Yeah, you could definitely make a movie out of this.
And no one would watch it, but it's about, we'd have to call something different, not Insurance Wars or something.
I don't know.
Put it into one of these large language models. What would you call a movie? What would be some movie titles for a corporate raid from one insurance broker to another in which they stole 23 million people? Put it in there.
Hold on.
Let's come up with our own right now.
Let's come up with our own first. Now let's see if ChatGPT would do something different. What would you call it? How about
the 23rd hour Insurance wars.
That's lame.
And in the 23rd hour.
How about on risk? No, that's lame.
That's lamer. Come on, everybody. Shout out to Brandon. Come on. Now ask this computer. Let them be creative. I love Insurance Wars, the 23rd hour.
That's so lame.
I love it. See what it says. What'd you type in and what'd you prompt it with?
Well, it obviously knows me well, right? So it knows what I'm thinking here. So I said, if someone made a movie about Howden's raid, what would you call it?
What's her
Okay, so
name?
we got the holiday raid, letters of intent, a platform. I don't know about that. Talent fight, portable, client list. Man, these suck. Hollowed out. That's not bad.
I like this second one. What was the second one?
Letters of
intent. What's the first one?
The holiday raid.
I loved the holiday raid, but no one would know it was.
Yeah.
They'd go there thinking it was a holiday movie and be like, "Oh my god!" Talking about insurance. I think we should fund this thing. I think it's a genius idea. We're going to launch it on Micah and on this risk seller podcast, Micah, and like anything in the name.
This is great. I said, what if you made it into an HBO series? Oh, HBO is exactly the right home for this. Slower burn, smarter dialogue, reputations dying in conference rooms. Here's how I'd frame it. The holiday raid, still the flagship. Others, mandates, portable, the platform, non-compete, client confidential.
Non-compete's good.
Wow, it even...
How about client fallout?
Client confidential. I kind of like that. You know, you've ever watched that show Industry on HBO?
No.
It's really good, but it's about the investment banking world, but it's in London. But it's pretty good. And I don't know if you can make a show about that, you can make a show about this for sure.
I think you'll absolutely.
You just
with a Big Short.
Big Short. You just put a little like, you know, sex, humor, and intrigue in the middle of it, and you know, cease and desist. That's not bad. Well, it even gives me the episode list. Season 1, episode 1, mandates. Season 2, the platform. Episode 2, platform. Episode 3, portable. Episode 4, the hollowing. Oh my god, it's funny.
I think we should do it.
Let's do it. Maybe we can see if Jim Hayes will fund it.
Maybe star in it.
He'll do. He could do the like behind the scenes, the real world analogies. Maybe we get Scott Galloway to star in it or something like that.
I love it. Talk about a desperation moment. Lemonade. Come on.
Lemonade. This is crazy.
Don't underestimate that this is still a belly-to-belly business, Brandon.
It's belly to belly. So what's happening with Lemonade? They're making lemonade into lemons.
Crushed lemonade.
Crushed lemonade. Lemonade's so Lemonade is basically a digital insurance company, right? It's basically a digital MGA. They're backed by a variety of different insurance company paper. I think Munich Re or something. I forget who is the paper behind them, but
we can find out.
So they've struggled. They've had loss ratios exceeding 100% for basically their entire existence. I think they're down to like 85% loss ratio now, but their combined ratio is still like 160% or something. So their expense ratio must be ridiculous. So now they are doubling down on this whole thing, and they've gone to Tesla, and they've said, if you drive a Tesla and you are in the AV mode for the miles or for the time that you're driving in AV mode, we're going to discount you 50%. The funny thing about this is that Tesla, and we've talked about this before, Tesla has had their own insurance facility that was backed by, I think, Markel, but they built like their own captive basically. And they've had a worse loss ratio than Lemonade. So Tesla already tried this, but I don't know if this is some sort of marketing exercise to try to boost up numbers, boost up, basically users or subscriptions within the Lemonade model. But it's been pretty evident in the numbers that Tesla drivers are far worse risks than anybody else it's not because of the car. The car is more
partially because
the car is more expensive and harder to fix. And obviously the battery is, electric cars just
the weight. It's the weight.
Yeah. Yeah. But they're also fast and they attract a certain type of driver, generally speaking. And it hasn't gone well
like
for them.
Subaru drivers, similar, yeah?
Yeah. Yes, just like Subaru drivers.
Maybe no. I GM insurance. I bought a GM truck.
Yeah.
Speaking of GM's troubles, it's like, maybe I get a couple GMs. I might as well get a quote from them.
Who do they use?
And they said, hang tight here. You should Google that. It's probably their own. There's a fronting company. Anyhow, they're like, yeah, as long as you give us all your driving data, no matter what, give us all of it. And we could sell it to other people if we want, I think, is what the guy was saying, including insurance companies and our company. I said, if it was the carrier and they wanted it just for themselves, and I wanted to prove my aptitudes on the driving side, maybe I'd be fine. I don't want anyone trying to monetize my driving behavior.
Well, they're taking the data back to Google, regardless of whether you're allowing it or not. They're taking the data. So it might be.
I know, that's just terrible.
It might be encrypted or whatever.
I drive good though. I just
don't drive good.
Absolutely, I drive good.
I drive good.
I'm a good driver. I don't really like the speed. I listen to podcasts. What's the rush, everybody? Who cares? Get off your phones too. Just listen.
Are you a cruise control guy?
Absolutely. Right lane. I don't give a shit.
I set my cruise control usually 5 miles per hour over the speed limit. 5 over. That's it. That's about as far as I speed.
Highway 12.
494.
Highway 12, 169, 494. You're there. Boom.
Bang, bang, boom. My path home is 494.
It's a nice drive, isn't it?
It's a good drive.
You ever go the back way? Down Chanhassen around that way?
If I have to. That's Highway 5 gets a little backed up.
Get some bagels on the way there.
Bagels?
And where is it, in Plymouth? Or no, you got to go north a little bit to go to Plymouth, don't you? Yes.
What bagel place are you talking about?
Isn't there a good bagel place over there? I don't remember. Bagel.
Bagel. How do you say it?
I say bagel.
Bagel. Yeah.
You say water?
What?
You say water, right? Not water?
Who says water?
I don't know. Some of these people say water.
Water.
Can you predict litigation outcomes right now?
No.
Accurately? Can anybody?
Well, we can talk to our boy Nick Rowles-Davies about this when we interview him. This will be the interview that will cut away here soon. We're interviewing him tomorrow about there's an FT article that came out this week, Financial Times article, and that's obviously been a big theme this season of ours is litigation financing, but in the attempt of outside owners, private equity, to own law firms. So this article said that there's a couple large law firms that are attempting to circumvent the current outside ownership restrictions by bifurcating the
administrative duties.
Well, yeah, they called it managing
Managed services.
like managed services operation, part of an MSO, separate from the legal portion. But
we get paid, but are they getting paid fair market rate for that kind of work?
So they're not going to target. This is why it doesn't make any sense, because they're not going to target hourly defense work. They're going to target plaintiff's work. So what is it that a plaintiff, like a verdict, that's all verdict, right? That's all money coming in from verdicts and settlements. How do you separate the verdict?
How do you justify big fees
from the managed services piece of it?
Yeah. Yeah, we're going to do the accounting, and we're going to get paid 100 times what we're worth.
Obviously, the private equity firms are trying to take advantage of the fact that there's these huge verdicts coming in. So they're saying, how do we invest in that? How do we get a stake in that? Well, you can't in the regular world of litigation, but if we separate these two into a consulting business and into a legal business, but I mean, the lines are very blurred there, right? So we'll talk to Nick about that when we interview him here. I hope you guys enjoy that. But
I can't wait to hear his opinion.
I think his opinion might surprise you on this. We'll see. He's a pretty pragmatic guy. I really liked our last conversation with him. So he's now our go-to legal finance scholar. And we got a nice little working relationship with this guy, so it's cool. Anyways, where were we?
Well,
lemonade. Yeah, I don't know. I think this thing's gonna crash and burn. I don't see this working out.
Take.
It's my hot take. I think severity overwhelms frequency, and it doesn't matter how you slice this up. It's gonna be. You're still gonna have the bad claims, and their loss ratio is still gonna suck. And it doesn't matter that sometimes they're on, autonomous driving. Obviously accidents happen in these precarious situations, whether it's ice or snow. By the way,
people run into you.
Look at Texas, Austin, places where Waymo drives right now. Austin, Arizona, San Francisco, places that got the snow this week, Nevada, Las Vegas. None of the Waymos, none of the robo taxis have been driving in the snow. So what happens in the ice? What happens in the snow? How does that play into this? There's just so much more.
Apparently, it's going to be better.
That needs to be figured out. I mean, I'm all for autonomous.
I'm ready for it.
I think autonomous is going to be great, but we're just not there yet. And Tesla's definitely not there. And by the way, Tesla announced today that they're cutting 2 of their models going forward, and they're going to focus. I think it was the S and the Y. I forget what it was exactly, but they want to focus on the Optimus robot. And by the way, I don't know, these robots don't seem like they can do anything right now. So I think it's hilarious that he thinks that these are going to be ready for major consumption in the next.
He's gonna get his crews to make them ready, Brandon.
And then,
hey, two truths and a lie, by the way, real quick.
2 truths and a lie.
Nick's coming on. You ready?
Yeah.
Back to the Future 1985 was filmed for 5 full weeks with actor Eric Stoltz playing Marty McFly before the director decided he wasn't funny enough and replaced him with Michael J. Fox. Bruce Willis was the studio's absolute first choice for the role of John McClane in Die Hard because they specifically wanted an actor known for his comedic timing rather than his traditional action star. In the famous scene in The Breakfast Club where Ali Sheedy shakes dandruff, remember where she does a girl on all black onto her pencil, drawing dandruff onto her pencil, drawing to create snow. The production crew actually used Parmesan cheese. Which one do you think is a lie? 2 truths and a lie. Which one's the lie?
I think the Bruce Willis one is the lie.
You're unbelievable. In reality, the studio was actually desperate because Die Hard was so technically a sequel to a film called The Detective. They were contractually obligated to offer the role to 73-year-old Frank Sinatra first. He turned it down, of course, and as did Arnold Schwarzenegger, Sylvester Stallone, Harrison Ford, and Clint Eastwood. Bruce Willis was way down the list and was considered a huge gamble at the time because he was primarily known as a TV comedian. You're right. The movie where he gets bombed, he was drunk all the time. He was a comedian. Remember that?
Die Hard would not have been the same.
No.
Can you imagine? Yippee-ki-yay, motherfucker. I mean, can you imagine Arnold Schwarzenegger doing that? I mean, come on.
Yippee-ki-yay.
I'll be back. Yippee-ki-yay. Let's be honest, most agencies don't have an ops problem. They have a visibility problem. FreeFlow.ai shines a light on what's actually happening inside your firm. It's not judgmental, but it's honest. All right, we're back. Risk Seller with our first second time guest, I think, right?
No.
Have we had this? Have we had anybody twice?
Yeah, we have. Howden guy. We had him on twice, right?
Justin? I don't think so.
Justin.
I've had him on multiple.
Really pleased you remembered.
Yeah, exactly. We'll cut this out.
Shit.
Mike DeGa. We've had him on twice. Zach Freeman.
This is our second time guest. Nick Rowles-Davies. Nick, how are you today? Sounds like you're under the weather, but hopefully everything else is going well.
I'm a little jaded with the flu, but I'm very pleased to meet you two again. It's cheered me up.
Well, good. We're pleased to have you back. I reached out to Nick as our go-to legal squire here now on the litigation finance side. The FT had an article last week, I think it was last week, about there's been this push for outside ownership in the litigation space now for a couple of years. I know that it's a bigger world outside of the United States, maybe. But they were talking about this MSO arrangement. I think it was some sort of managed servicing operation of some kind. Yep. Where they're split
service organization.
Yeah, managed service organization where they're effectively bifurcating from what I can tell, the legal consulting from the management consulting or the consulting side of the business.
Administrative as well, right?
Yeah, and possibly IP, marketing, all that sort of stuff. I think is where they'll want to they want to move all that into the separate entity, which is going to be backed by private equity. I mean, there's a range of plays there, aren't there? Because that article, I think it was Louisiana at law firm, and it was all about growth and acquisition and economies of scale, which kind of makes a bit of sense. But the bit I understand it, but it's distinct from alternative business structures, which I think you can do in Arizona and Utah and in the UK, where you can share legal fees. But obviously the whole fee sharing of legal fees is prohibited primarily across the US, other than maybe those two places. And where you've got big plaintiff personal injury bar law firm, that's where the money is. So I just was doing a bit of research before we came on. They can't employ the lawyers unless they're general counsel in-house. So the lawyers sit in one bucket, and the operational side, back office, and I presume the marketing, because that's where they spend all their money, is sitting in the MSO, and they will recharge to the law firm either a paper case or a pay per click, or I don't know how they operate it. But I think the challenge is they're not allowed to give, they're not allowed to sell to other lawyers or recommend them, but I don't think they're allowed to be seen to be assessing the case. They're just giving deals and origination. And I suspect that's where they'll get the economies of scale, because they'll be buying up a lot more advertising, and they'll give them to different firms under the same banner, and their margins will be better because the cost per acquisition of each case will go down. And I guess ultimately you get to a point where all the assets and IP are owned in the MSO, and they get licensed out to the other firms. I mean, you can see even on smaller margins, not the law firm's contingency fee margins, but there's still money to be made. But it's very interesting. I would have thought if you're going to do it, you want to do it as an ABS rather than an MSO. But I think we exchanged stuff on LinkedIn not that long ago. Burford have said that they're interested in doing those sorts of deals. So there's definitely a move towards it. If it's not private equity, it could be funders, and that can raise some challenges from an ethical perspective, I suspect.
Yeah. So you mentioned the targets here for doing this will likely be on the plaintiff side, right? That's where the money is.
I thought so, but I did see also McDermott had indicated they were looking at doing something, and another big firm. I can't remember who it was, but there's been a bit of press about. It was Cohen Gresser. So
yeah,
not firms that are doing volume personal injury. These are big ticket litigation firms and do a wide range of services. So there's obviously a business model that they're looking at. Maybe some sort of exit route for partners where they need liquidity.
So obviously the rub here, right, is that from a critical standpoint is the outside ownership is not currently allowed in most jurisdictions right now because of conflicts that can arise, right? When someone is representing a party, and if there's outside ownership, that sort of conflict check gets murkier, right? Is that the kind of the general thesis behind?
Yeah, well, I mean, certainly in an ABS structure, I think the reason they feel more comfortable here is I think the rules in Louisiana are pretty strict. And the law firm is not separately owned, it's owned by the lawyers. All they're doing on the face of it, and I accept the devil's in the detail, is they are outsourcing all of their back office function to an independent entity, which they also have a piece of and it's financed by either a funder or private equity. So the lawyers own the law firm, the lawyers are employed by the law firm, and they use the back office accounting and marketing of their MSO, which some of the lawyers will also have a piece of. So the challenge there is, if you are a lawyer and you own a piece of another company, presumably you'd have to make sure that you didn't have a conflict if you're acting in a dispute where your ownership conflicted, not just your law firm. I guess, I mean, you'd have to, wouldn't you? That would be the same though with any outside interest for a lawyer. It's just wider because the whole law firm or a cohort of partners in the law firm owns an MSO, which is trading with entities that are not trading with the law firm, they're trading with their back office team. It gives you another layer, doesn't it? It's another layer of concern and conflict.
Yeah. I mean, the interesting piece to me is obviously law firms make money billing for legal advice, right? I presume there's very little revenue that is earned in a law firm for non-legal activities.
No, I think there'll be a margin because they'll be charging some sort of cost plus arrangement. And there will be economies of scale if they're buying up marketing time and advertising space. And if they're providing those services to, instead of one office, to 50 offices across the US that are entitled to be able to do that. But they're never going to, I think when I've looked into it, the margins aren't great, but it's whether it's the volume that gets you the money. So you're not going to get huge returns on administering the back office legal functions. And I'm not sure how that works with McDermott or Cohen and Gresser. I haven't studied it, but if you're looking at reducing your acquisition cost of buying in personal injury claims or whatever claims you can buy, then that might be a good route. But the private equity house is coming into the MSO. So it's going to have to get scale.
So how do you dilute? I mean, you look at it from two different lenses, right? So how do you distill on an hourly billing arrangement? I could maybe see how you could distill administrative from legal, maybe, but
you mean an overhead in terms of overhead attribution,
right?
Yeah. So the contribution used to be a third. So overhead staff. I haven't been in practice for a long time, 2010, but it used to be a third, and you'd be looking at 30% margin. I suspect everybody wants that now. I don't know whether they can get it.
So do you think, so that's, I mean, that's an interesting, I guess, outline of how the kind of the back end of a law office works. But do you, I presume then that during the billing cycle, if somebody is on a defendant side, if somebody's doing hourly billing and they want those administrative, non-legal costs to be able to go over to the MSO side, you have to call that out then in the billing where you're actually breaking it up. Whereas before it might be, you know, $800 an hour for $800 an hour for legal advice in IP litigation. Now maybe it's $250 for legal.
Well, it's like hospital setups.
250.
It's similar. Yeah, because instead of, I think the way you should look at it, and maybe it's a bit simplistic, is instead of in the accounts for a law firm where you're working out how you break down your hourly rate and to get to the right hourly rate, instead of looking at it as you allocate internal departments of finance and marketing and whoever, you're just putting everything to one entity that's doing the whole lot, but it's all outsourced. So the law firm will simply employ the staff and the partners will share profits. Everything else, maybe not. I imagine professional indemnity insurance and that all that stuff has to be within the law firm. But if it's not specific to running the law practice, it'll all get shifted out to the MSO, I guess.
Yeah, it will just be I'll be very curious to see how that becomes more or less, I guess, transparent to the customer when they're billing for these services, if they have to unbundle them effectively on the billing side, which I presume they would if they're trying to divert revenue or separate revenue streams.
Well, I guess, well, from just take that contractual perspective, you're a corporate client employing law firm A that has an MSO. You agree an hourly rate. You might not like it, but the hourly rate is built up from internal data, which suggests what that law firm needs to charge to cover its overhead, pay its salaries, and make a profit. So the law, I don't think it will actually change in practical terms. Corporates will say, I want to charge, I'm going to pay X thousand dollars an hour, or I'm not going to pay that much, and they'll either take it or leave it. The difference comes, and that's why I'm slightly confused as to hearing about the larger law firms doing it. The difference comes if you're running a contingency fee practice, your overhead is everything because you're getting paid out of the award, whatever happens. And the lower amount of cash that you spend on getting to the point, that liquidity event, means you make more money. So if you can get economies of scale by moving what you're spending out of the law firm into a specialist MSO, which is dealing with all that back office, and you can do it cheaper, the profits are going to be higher. Where my slight disconnect is that doesn't benefit, excuse me, that doesn't benefit the private equity house, only benefits the lawyers.
Right. Yeah, that's.
But maybe I'm looking at it the wrong way.
When I look at it, I mean, it seems obvious that the goal here is to target probably plaintiffs firms where big dollars are. I mean, I don't understand why anybody would be super excited to put a bunch of money in to make marginal incremental benefit on a per hour billing cycle. I mean, it's got to be on the plaintiff side. But
I agree with that completely. But there's no benefit. The only benefit to the MSO and the investor in the MSO is economies of scale of what they're buying the services and what they're selling it to the law firm at. That's their margin. I can see why the lawyers want to do it. They want to use private equity money to buy up other law firms, so they've got bigger books and caseloads, but that they can't share that fee. Right. So,
well, that's the
whole benefit has to be in the margins. So I don't know. I mean, they've not been a great success. Or maybe that's a bit of a sweeping comment. There have been some challenges to, for example, publicly listed law firms in the UK where they've either not succeeded or they've been bought back by private equity. There's been a few that have had to be taken private again. There's a couple in the UK that are doing quite well, but their model is nothing like this, and they're full ABS structures. So all the lawyers are employed by the publicly listed company and receive a share of their. I think the way it works is they keep, particularly Keystone, which is one of the success stories. The lawyers keep a large proportion of their hourly rate, and the balance goes into central overhead. But it seemed the share price has been pretty strong. I haven't checked recently. So, and this is not investment advice, I might add.
We disclaim a lot. No investment advice here. Would it be cynical of me to suspect the worst here, and that there's some sort of attempt at circumventing a way for private equity to have a stake somehow in larger verdicts here, and somehow distill these verdicts in a way that the attorney's side that is overhead in some way, where there's consulting that's happening, or something that is enabling or opening Pandora's box for private equity getting access to verdicts?
Look, I would be mortally surprised if you didn't have a cynical view to it. Would concern me as to what's happened to you.
Are you okay?
I also think, look, there's always going to be that question. I just don't see how it works. That doesn't mean that you can't exercise some sort of soft, not power, but sort of potential. The risk I have here is that I don't know enough about the state bar in Utah, Arizona, Louisiana.
No.
From the research that I've done, albeit brief, it's pretty tough, and they take a very dim view on anybody that's fee sharing, and it's for obvious reasons. You're not supposed to do it, and I've encountered that in terms of litigation finance with law firm lending, because you don't want to be. It has to be a loan. It can't be like a profit share, because that's prohibited. So I'm skeptical as to. I don't think that's the driver. But I just don't see that it's such a good business model as they're suggesting it is. I don't get it. ABS, I get, because you can share in the profits. If you can reduce your overhead and get huge verdicts, and you can share in those fees, why wouldn't you do that? And that's the point that you're making. And I think in an ABS structure, absolutely, there's a benefit there. Private equity gets direct access to the cash that gets paid out by the defendant or the defendant insurer. So yeah, 100%. This doesn't feel, the guardrails feel a little bit too tight. That's a bad phrase, because I'll then get castigated for suggesting they should be less tight. But I mean, from a practical,
it's the headline. We just got our headline.
Yeah, brilliant, fantastic. Yeah, I just given you that. No, I don't think they are too. I think they're too tight, but I think they're too tight for the benefit of what you just suggested. So they're actually in good shape for the bar. That's what I'd say.
Yeah,
it's a very we just don't have this in the UK. I don't know whether they have it in Europe. I don't think so. But the whole ABS thing has worked quite well. I don't know how many licenses. I read somewhere there's ridiculous large number. That's not too many.
Can you inform the listener again what ABS is?
Yeah, that's the alternative business structure where non-lawyers hold direct equity in the law firm. And then in the US, that's limited to DC, Utah, and Arizona. So instead of having this dual entity where you have the law firm, which is wholly owned by the lawyers, and a management company, management service organization, which is owned between the lawyers and the investors. Although, is that true? Do the investors own the MSO? Does the lawyer have any interest in the MSO? I suppose that's a good question. I don't know.
It's probably case by case. Yeah, if they want to be.
No, but in an ABS, it's a fully integrated business.
Right.
So, I mean, the plan is they transfer the non-legal assets, AI, cybersecurity, national marketing, and they get management fees, no direct cut of the legal fees. So it is a limited, doesn't strike me as, there must be a bigger play. It must be growth, economies of scale, unifying firms nationally.
Yeah, and hence the skepticism. It just doesn't seem like that works in the private equities, from an investment theory standpoint.
How many have been done? Because there's been a couple. This one's obviously, I don't know whether it's been done yet, but they've set up Orion Law and said it's starting. But have there been many?
Not that I've seen.
And Arizona says it's only granted 100 ABS licenses. I don't know how many law firms are in Arizona, but that doesn't seem too high.
I'm sure there's
I
more
think-
than that. No.
Yeah, well, probably, yeah. But I mean, there's a definite. I've certainly found with the US bar, there's much more of an ethical concern about fee sharing and these sorts of structures, and that's not a. It's neither a criticism nor me giving them praise. It's just a very different outlook. In the UK, ABS structures have been around. Must be over 10 years now. Burford set the first ABS structure up when I was there back in 2014. So, and then they've gone through the whole process, and not Burford, but others are listing them, taking external capital, then either buying them back. I mean, as I said, they've not been a massive success story, but there's less of a concern about the ethical side in the UK, and I'm not sure why that is. There's certainly
Probably because
big
your
worry.
verdicts are smaller.
Yeah, they're
Yeah,
smaller. The money factors aren't.
and we don't have juries and judges. Yeah, I think that must be it.
Is it all
Yeah.
is it all bench trials in the UK?
Yeah.
Oh, I don't even think I knew that. That's fascinating.
It's all bench trials, and our current Attorney General is trying to reduce jury trials for criminal cases as well at the moment, which is causing a bit of a stir.
Really?
Mm.
What's the off topic, I
the-
guess, but what's the strategy for that?
He thinks that it will improve access to justice and speed up the system, but I think there are people better qualified than I at the criminal bar that would say you'd need more judges, and the jury system is actually quite efficient, and that's actually a fundamental right to be tried by your peers. So it may be another Labour government U-turn, it may not, we'll see, but it's certainly reduced in its momentum.
How are off track again, but how are judges appointed or elected in the UK?
There's a judicial board, and they get ratified either by the Lord, or must be the Lord Chancellor. They're not elected; they're appointed.
Okay, so they're appointed. And are they
In the High Court? They're very hard to get rid of.
their term limits or
No,
how does
I
that
think
work?
that's right. Do you know what? I actually don't know the answer, but it's very hard to remove one. So unless they do something really quite outrageous, they'll be there for a long period of time.
It's like a federal judge, basically, in the United States.
I guess. Yeah. They're not elected, and they're appointed by the Judicial something board. I mean, I'm embarrassed about my ignorance, but
No, that's okay. I was just kind of a curious topic. The obviously your favorite word, social inflation. We both agree that it's a terrible description of what they're trying to illustrate, which is kind of the value and the value of injuries, the value of torts, going up. When I saw this article, my concern is that this just further fans the flames of the system and it's people trying to take advantage of it. Yeah.
Whether it can, I mean, there's two elements to that, aren't there? There's the one is, does it actually make any difference? And I don't know enough yet to be able to say, but possibly not. But more importantly, is it will give that lobby more ability to talk about the potential ills and problems of external ownership, even if it's only in part of law firms, and the sanctity of the bar and the fact that this shouldn't happen. And I get that. But I don't know. I think that it's not for me to say what the defendant insurance industry should be saying, but I think got to come up with a better answer, particularly when some of the people, I think I said this to you before, it's not so much what they're saying, it's the people that are saying it. The very same people that on the one hand are condemning the practices and on the other hand are making use of litigation finance themselves. So it's you have to have credibility when you're making those arguments, and some of the people that are making the arguments just don't have any. And that could be said for both sides of the fence, of course, but it should be a balanced debate. Nobody's binarily, if that's a word, 100% accurate. It's shades of grey, and there are some practices by defendants that probably they could work on, and there are some practices by plaintiffs. I did an article not that long ago about the whole, it wasn't particularly long, but Samir Parikh that writes about opaque capital and the effect it has on litigation finance in mass torts. and layering good claims with bad claims. I don't know whether that goes on at all, but I can understand why it might, and I get that, and I can see that that's something that defendants and insurance companies are concerned about. But focus on that. Don't focus on telling us everything else that's wrong with the world. Just maybe pluck out the ones and assess them. And I think you did a podcast with some guys that were assessing that and had found some pretty bad behavior, hadn't you?
Yeah, we the gentleman from Forewarn and another gentleman that that owns a law firm. They're they're big. Yeah, their thoughts are around the kind of the litigation harvesting side of the business, as they call it, of the marketing efforts to drive up the investment dollars. But their theory, which is interesting, was is that there's a disjointment or dislocation that's made a dislocation that is not really a dislocation between the advertisers and the law firms and the investors, and so many dollars are going towards SEO campaigns and direct targeting of potential litigants and that sort of thing, and the funding behind it. That they say they've proved at least some causal relationships, but
that's been going on for years. That's what happened in the UK back in 2000 to 2003. And then it all came to a head because everybody that was doing that had to be regulated. It was a criminal offense to advertise for personal injury claims. And it all started because of the basis of remuneration. If you're remunerated on an accepted case and then out of subject to fee sharing and all that sort of stuff, you get paid on success, that reduces the amount of fraud. Whereas if you're just paid for names and signups, you're going to generate a system which people are incentivized to just sign people up whether they've done any work on it. So I agree that could do with some work. And but again, it's down to the point is there will be people within that cohort of claimants or plaintiffs who have a valid claim. Now, you're never ever going to get them all rooted out, the people that are the bad actors. But you can put things in place to reduce that. But that's where there should be cooperation, because it's not good. Lawyers shouldn't want to bring claims for people that are, I mean, it's not the lawyers you're talking about, because it is the funders, but no funder really should want that. It's bad reputation for the industry. It's not good. There should be, and I think there is much more being done. When I look at what Dai Wai Chan's doing in the guys at the Consumer Legal Alliance, trying to improve that. But there's certainly a much better dialogue than there used to be. And that has to be a right thing, because, there are challenges and there are things that aren't being done very well. But that sits on both sides, as we said before.
Yeah. Yeah, no, I think the challenge is just all these, there's like this MSO strategy, litigation, harvesting theories, all these, I think our industry is just constantly seeing these new methodologies behind, from our standpoint, trying to get the same result, right? Which is more frequency, bigger verdicts. And the system, as you and we've talked about before, the system is under stress, just in terms of the money, the money's paid out versus the monies that they're taking in. Loss ratios are in some categories unsustainable, and that's leading to a lot of the problems that that we're seeing out there in coastal, Florida markets, New York, California markets, in terms of insurance. Kind of the insurance system breaking. So, I think that go ahead.
Is that volume driven? The suggestion there would be the volume's driven by an increased awareness, which is driven by more targeted marketing,
which is funded.
Yeah,
investors, right?
But unless that. So it gets back to the same point, which is if those people have a legitimate claim, then the market has to accept that probably their understanding of what the liability was lower. If it's not that, and because these are fraudulent claims, that's a whole different thing. I think the challenge is, how do you define which it is, or how do you assess which part is which?
I think the problem is that for years we've built, actuarial tables and data sets and everything based on a fundamental understanding of, numbers or claims that come out of a situation based on the law of large numbers and how normal transaction volume kind of flows from that. And now the kind of the formula has changed on an artificial basis, right? Because there's more money being pumped into the system that makes people more aware of it based on this whole new dynamic. So the system is now catching up, but now people don't like the result of the insurance system, right? Because the dollars are too heavy on the funding side. So there's this imbalance that's happening in the system, and if we gin it up too much and kind of turn the heat up on the financing side of it, the system doesn't work. I think that's one of the theories. Now, we can change how the architecture of the system works. We can change, deductibles. We can change coverage triggers and things like that. But then we have more losers than winners, and this market that's supporting this insurance market that's supporting the entire ecosystem of plaintiffs, of defense lawyers, of everybody. I mean, does it break? I think
this is in specific lines, though, right? It's not right across, or is it right across the board?
I think it is more tort heavy, but obviously it's happening on the property first party side just because of other factors. But I wouldn't say that there's a lot of concern about kind of the litigation side of the business on the property insurance side.
Tort. That's
more climate stuff, right?
It's a fender bender traveling 50 miles an hour, no injuries, and everyone's fine. And 6 weeks later, you get a demand for $10 million when they have a 2007 vehicle, and the pay wouldn't support a $10 million. You know what I mean? Those types.
But even auto insurance
is a real scenario.
Even auto insurance is somewhat sustainable. I think it's like the big product mass tort.
You think auto is sustainable, Brandon? I would disagree. Totally disagree.
Maybe not areas. Texas, but yeah, I mean, it is not. It's not good, certainly.
And how is that? I think we exchanged messages on this the other day. There's been a suggestion that the use of coordination technology, AI, collaboration on the plaintiff's bar makes them much more sophisticated and the way. I mean, some of the stuff that I've been reading, I don't know whether I can't remember whether I've did the article or not. Either it's going up there or it will. But the use of AI in the plaintiff's bar to be able to get hold of the medical data, produce the letters of claim, and put everything in a way which is really impressive using technology. Now, it's nothing that hasn't happened over the years, but the use of AI is making it a lot easier. Is it right then that the suggestion is there's an asymmetry there, that the defendant bar just is not as coordinated as it should be? And has that got anything to do with contingency fees, do you think? Or lack of?
But possibly. I mean, we had a article that we reviewed the other day about kind of the expense, AI benefits on the defense side and expense ratios that are being positively impacted based on the use of technology too. The issue is an expense ratio in comparison to the loss ratio, which put them together. You have, in the insurance parlance, you have a combined ratio. The expense portion of it is just so much smaller than the loss ratio component of it, and the loss ratio component is kind of climbing exponentially at a pace that the clients are constantly you pay out a $1 million claim, the industry for that client has to put a big load on that next renewal in order to get the money back from the payout to that claim. So it's just this like big snowballing impact that's happening. And it's almost like the, the American debt conversation. Eventually it just gets too big and it breaks.
Yeah. I mean, the short answer is there is no short answer, I think.
Yeah. No.
But even, I don't know, we get the same, not the same complaints because it's not quite done the same way in the UK, but there's certainly a rising concern over the sort of personal injury. But we don't have jury trials. And the assessment of damages is fairly standardized on case law. So
yeah,
we just don't get the same awards.
I mean, it's not a bad conversation to have. Should civil cases switch to bench trials? I wouldn't be opposed to it, but you have all of these. It's a very like constitutional discussion in the United States in terms of rights. So, but yeah, I mean the hyperbolicness of a jury. They're seeing these numbers, and the numbers become gospel, and then those numbers just become a baseline for the next number, and this like verdict begets verdict begets. It's there's all sorts of ways why this system is broken, but
that's the right word.
Yeah,
Brandon.
But it's becoming concerning. Yeah, for sure. I think the industry doesn't know what to do. I think it's just that's why we're coming up with all these stupid nomenclatures, social inflation, all this crap. But we have to kind of maybe re-identify the problem and get more granular in terms of how we talk about it, and that's what we're trying to do. But a lot of the space just doesn't understand it too.
Yeah.
No, and they're obviously built-in prejudice. If you're a plaintiff personal injury lawyer, you're really not going to want to switch to a bench trial.
Right, exactly. Yeah. Well, we appreciate.
Yeah, we got to let him go. He's got to get.
Yeah, we appreciate you coming on. Go get some rest. We'll tee you up for next time.
You're going to be our
Let's
first
make it 3 in a row.
third.
That'll be good.
You're going to be our
first third. We're going to be our
Yes.
first third for sure.
Third for sure.
Good stuff. All right, guys. We take care. Appreciate it.
Feel better, Nick.
Thank you, Nick. Appreciate
Thank you,
it.
guys.
Lexolent. Nick Rowles-Davies from Lexolent. Thank you very much.
Take care.
Bye-bye.